Hey, everybody. We've got a great new show for you today. It's Thursday. We're going to make it to the long holiday weekend, everybody. We're going to do it.
We can do it. We're going to start off talking about Meta's new Facebook's group overhaul that looks a lot like another product. I know you're amazed and surprised to hear it. Looks just like Discord.
I am shocked that Zuckerberg is copying another founder's innovations for the 787th time. There's a lot of other quick hits today. Sequoia is raising a $2 billion in new funds in venture and growth. And while we were talking about this, there was a breaking news story. SBF is reportedly acquiring BlockFi for $25 million. They were previously valued at almost $5 billion.
Mm-hmm. And speaking of doubling down, Michael Saylor is doubling down on MicroStrategy's Bitcoin holdings. We're just going to talk about who's going to come out a winner here.
And we live in the future. We love this segment. MLB is looking to automate home plate umpires by 2024. Is this a good idea? Does it ruin the sport? Does it make it better or fairer or faster? That's what we're going to break down in the We Live in the Future segment.
And then we're going to break down Substack's business model. That company's making some layoffs. Jason's going to do a little back of the envelope math that make it look like it might not be the most viable business.
It's a terrible business. I'll explain why. It's going to be a great show.
Stick with us.
This Week in Startups is brought to you by Zapier. Zapier is the easiest way to automate your work. See for yourself why teams at Airtable, Dropbox, HubSpot, Zendesk, and thousands of other companies use Zapier every day to automate their businesses. Try Zapier for free today at zapier.com/twist. UserTesting. With UserTesting, you'll understand it from your customer's perspective by seeing how they interact with your products, apps, or messaging. Get real-time feedback real fast. Put yourself in your customer's shoes. Visit usertesting.com/twist for a free trial. UserTesting. Real human insight. And Grammarly. Grammarly is an all-in-one writing tool that helps you churn out clear and concise communication fast. Go to grammarly.com/twist to sign up for a free account and get 20% off when you sign up for premium. That's grammarly.com/twist.
All right, stop us if you have heard this one before. Facebook and Mark Zuckerberg have looked around the universe of tech products and thought, that one looks good, I'll take it. It's like a menu.
Yeah, this is not the first time, nor will it be the last. Facebook Groups is testing a left-aligned sidebar and channels similar to Discord. Groups will be listed with rounded square icons. I've seen that before. Group channels can be text chats, audio rooms, or feeds. These features look like it'll be easier for groups, which is pretty hard to find. I mean, we started a couple groups on Facebook, and then we just gave up on it because it just felt like it wasn't worth it. Like anything in the Facebook ecosystem for a business owner, the only thing that really works there is giving them money for ads. Every other feature they use, they wind up deprecating, or they don't let people see it. So then you wind up investing in it, Molly, only to have them throttle who sees it. And then you have to pay to get exposure to the people. You just spent all this time building a community. That's why I tell everybody, do not invest in Facebook communities or all this stuff. Or if you do invest in your Instagram account or your Facebook page, you should be, the number one goal should be to get the email addresses of all of those people. Even if you have to one-on-one, encourage them to sign up somewhere else to get their email addresses, because Facebook will screw you, as they've screwed every other partner they've ever had.
100%. And actually, Bill Gurley had some thoughts to that effect, which we'll talk about in a minute. We should note that, Facebook has also gotten in trouble for promoting groups because they were so hard to find. Then Facebook was trying to algorithmically promote groups, and that was leading to them, you'd spend 10 minutes on Facebook and all of a sudden see one that was like, hey, you want to march on the Capitol? Yeah. And so that was a problem for them. So in some ways, this seems like a natural evolution and maybe some smart product decisions around how to make groups more usable. It also, no one can ignore the fact that it looks almost exactly like Discord, a product that has sort of come out of nowhere with respect, in Facebook's mind, and become a gathering place for this next generation, especially young people that Facebook is hoping will someday come back. And then Meta has also been shifting to make Facebook look more like TikTok. So your feed recommends more content from accounts that you may not even follow. And then, of course, in the past, we should just remind everybody that Facebook has directly copied Snapchat with both Instagram stories and Facebook stories, with ephemeral messages and lenses. They copied Slack with Facebook Workspace and Fortnite with Facebook Horizon.
Yeah, I mean, and this is just the start. I mean, they also copied Path.com with their Path was the first one to have the emoji reaction. So if you hit a heart, it would give you like 5 choices. You could be sad if it was a death notice, or you could be joyful or whatever. So, they copy every little thing. They copied Craigslist with the marketplace product,
right,
et cetera. And, I my advice to founders, because this is This Week in Startups, is do not ever meet with Facebook if you're a founder of a company. I gave this message to Y Combinator startups a long time ago because Facebook had set up some kind of deal with YC to meet with companies ahead of time. And I was like, they will just steal everything you do. You're crazy. And people were like, oh, you're hating, Jason. And the truth is, if you meet with a company like Facebook, they will steal every idea you have. They're already studying you to steal your ideas. They have had no original ideas in the history of the company. Facebook itself was a copy of Friendster. And he actually also stole from the Winklevi who hired him. So if you know the whole history of the company, you understand that they're really good. That is their superpower, is making somebody else's product better. So if you make a great product and then you just copy it, my Lord, you can just keep building on top of it. And, you don't have to make any of the decisions. And they're just very good at it. And they will do it 3 or 4 times. Remember with Snapchat, they had poke first, and then they had a second swing at the bat. Then they did an ephemeral messaging, as I wrote here in the notes, where the messages disappeared. So they don't have any problem with it. And Facebook, at some point, there was a report from Facebook that Zuckerberg just said, listen, if I don't want your ideas to the Instagram team, just copy Snapchat. And admitted to Congress, like in congressional testimony at one point, Mark Zuckerberg was like, yeah, no, we definitely do that. And I found an article from 2013 that was like, here's a quick list of apps and services. Facebook, this is just incontrovertible. This is what the company does. It's their DNA. It's their DNA. And, if you work there, it kind of sucks. But here is what I guess This Week in Startups looks like. If I will pull it up on the screen here for those of you watching, youtube.com/thisweekend. If you want to watch the show, hit the subscribe button, hit the bell, and you'll get notifications when we go live on the air. And so this is what the Discord channel looks like. That's what Discord looks like. And that's in dark mode. So and you got, if you're welcome and you're whatever and your different groups and the whatnot. And then here's what, pull up the Facebook version now. Yes. And 24/7 gamers. And it's just the same. And it's just the same. Yeah, you can see there are those curved little buttons there. So, in their defense, if a metaphor has been established or a new content format has been established, it's kind of hard to work against it. But in totality, if you look at their behavior, and this is what friend of the pod, Bill Gurley, has been talking about, it really is the frequency of this. So here's what Bill Gurley said. When I see this blatant behavior over and over, it makes me wonder if one of the core tests of a monopoly is how much blatant copying and tying together, integrating a company does. This was, and is again, Microsoft playbook. Also appears to be Facebook core playbook. Also, a second test, he continues, might be, in quotes, how do they behave in partner meetings? Over the years, I have found monopolists browbeat partners and suggest deal terms that you would never consider in a peer-to-peer deal, outlandish deal terms that would hollow out your company if you took them. Molly, your reaction? I have been doing interviews for years in which people will suggest to me off the record how horrible it is to do business with Facebook and how it particularly as a sales partner and an advertiser, and actually Yahoo used to do this back in the day too, just sort of be so arrogant. Like we have a fire hose of traffic and nothing is ever going to change. And we're always going to do this. What I did find interesting about these Bill Gurley tweets is that, and you tell me here, it seemed to me to be slightly unlike a VC to say that, because like Peter Thiel, for example, on the other, end of the spectrum in 0 to 1 is like unapologetically and explicitly pro monopoly as like the natural evolution of a business. Yeah. So here is what the difference. One, Peter Thiel is a unique character in all the world who you got one extreme over here, wants to be a contrarian about everything, and he loves the idea of a monopoly or backing founders who go for the 80-90% position in terms of market share.
Yeah.
So that is kind of like his intention. Now, if you think long term for the ecosystem and for the country and for capitalism and democracy, right? If you just broaden out from the returns for my fund, Peter's talking about for the returns of my fund and for you as a founder, you should aspire to get to that 90% monopolistic position where you don't have competitors. Okay, I understand that as a goal for somebody. But if you were to look out at the ecosystem, if Microsoft hadn't been throttled in the 90s, what would things look like today? They would have crushed Google. They would have crushed, just like they had crushed Netscape, and that was what it was over. They would have just given every single Windows user free search, free Gmail, etc. And every time something new came out, they would just use their platform to integrate it. And that's what Bill Gurley's referring to here. But he's also referring to maybe a new test, which is how often do you copy things and then integrate them into your platform? You may have noticed now when you post a story to Instagram, it automatically puts it on Facebook. Your Facebook login works with Instagram.
Every time I'm like, no, you.
Yeah. So they have really integrated these platforms together. That gives you a crazy monopolistic ability.
Advantage, yeah.
So if we see the Facebook marketplace also be on Instagram or, in this kind of integration across platforms, that's where you really start to see things get pretty anti-competitive. So if you were a VC in the industry, do you want to have just two buyers left in the industry, Microsoft and Facebook, or Google and Facebook, whoever's left standing? Or would you like to see, many different mid-sized companies? So instead of, $3 trillion companies, how about 10 companies worth $400 billion? And then they fight it out, right? If Yahoo still existed as a contemporary to Google, if BlackBerry still existed as an option, or Nokia to Android, if Palm still existed, if we had a little more diversity in the ecosystem of choices for partnership, that would be better for consumers ultimately, probably. And it would be better for venture capitalists, certainly, because you'd have more buyers, more people to partner with, and they would behave better. So the behavior is getting really bad.
And your companies aren't going to get crushed or put out of business, right? I mean, it really is like, it's good long-term thinking on Gurley's part to say, listen, you have to have a vibrant innovation ecosystem.
Yes.
One actually really interesting example of this is cloud services too. I mean, it's effectively a duopoly with Google a distant third, and the pricing reflects that. And so, I think I have heard VC say that they're finding that there's only like a couple places to even refer startups to. And then those deals are getting increasingly onerous. And so this idea that you could just easily build a startup or a SaaS platform because cloud services exist and are so freely available might start to change as well.
There are maybe 2 or 3 apps that my teams can't live without. And one of those apps is Zapier, which makes you so much happier. Zapier is a simple and no-code way to connect your apps together to do all kinds of creative and interesting things that will save you time and make your job more fun and more productive. It gives anyone the power to automate your business. And they have over 5,000 apps connected now. It just shows you what you can do year after year if you say really focus. And Zapier has been super focused on connecting things like Google Sheets, Salesforce, Slack, Webflow, Pipedrive, Shopify, Zoom, and so many more. When someone registers for our Angel University workshop, we use Zapier to onboard them into our syndicate. This is something we used to do manually. Zapier is all about increasing your efficiency, saving you time, and time is money. In fact, the average Zapier user saves over $10,000 in recovered time every year. Over 1.8 million people and businesses are now using Zapier. See why teams at Airtable, Dropbox, HubSpot, Zendesk, and Inside and Launch, and thousands of other companies are using Zapier all day, every day. Try Zapier for free today at zapier.com/twist. I'll spell it for you if you're new. zapier.com/twist, TWIST. I mean, it is basically those three, AWS, Microsoft, Azure, and Google, have 65% of global spend on cloud computing. I think in startups, you might even see it be even more consolidated. Google is a distant third. Right now, Amazon, 33% market share, 22% for Microsoft right behind them. This is Q1 2022 from Synergy Research Group. Google, 10%. The next 10 companies together, 21%. So it's a little more diversified, but it's still kind of trending towards Amazon winning it all. Microsoft has made a big push, I will say. It's pretty impressive that.
Oh, yeah. I mean, they came out of nowhere and won that big Jedi contract.
Yeah.
They're not messing around in the slightest in cloud, but even a duopoly, ultimately, I would just caution startups. Like at some point,
it feels like it's trending towards a duopoly is, I think, the best way to say it, right?
Yeah. And what will that mean in terms of pricing and frankly, like data privacy? Yeah, I wrote a big column here a few years back about the idea of cloud neutrality, which I think is going to become increasingly important. Like, sure, Amazon says it doesn't look at your data, but it said that about its third-party listings too.
Yeah.
Like if Facebook was in cloud, forget it. They would just look at your source code and copy every business.
Yeah. It's it's something where one company's behavior is standing out amongst all the rest.
Yes.
And that is Facebook. And so just very important for people who want to go work for a company. If you're a young person and you're talented, I think working for Facebook is just bad karma and a bad experience. I wouldn't do it. I would aspire to work at a startup if I was a young or even any talented person. Why take like the extra 10% of the money that Facebook would pay you to work at a boring company that steals other people's ideas? Better to work at a creative company where maybe you come up with some of your own ideas. Maybe you innovate on your own. And I think that would be a much better concept here for everybody. So I don't trust them. I can tell you one story, Molly. I went to meet with the Facebook team. I won't say who, but very high level people, leave it at that. Mm-hmm. And we were talking about pages and we had a bunch of content and we were a YouTube partner and they were kind of courting us to put more videos on YouTube. I said, okay, well, what's the revenue split? They said, oh yeah, we don't have a revenue split. But you can, market your other stuff off platform. I'm like, well, every page we have, we can't get people to click off site. We get like less than, a tenth of 1% of the people in the group to click off. And you've also throttled. So every time we spent like $20,000 in an experiment building up this page to 250,000 people, we did all this investment in marketing. And now we only reach 5% of the audience. So we post a new video, we only get to 10%. We only get 10,000 views out of 250,000. On our other sites, on YouTube, we get like 30 or 40%. And they're like, yeah, well, you can spend money to get more views. I'm like, yeah, but we don't have ads on here. We can't, this model doesn't work. I was like, I tell you what, will you give us $1,000 for every video we place in here? We'll place, 100 videos a month. You give us $100,000, $1.2 million a year, and we'll let you host those videos for 5 years. Mm-hmm. And if any advertising comes, we'll do the same split as YouTube, down the road. And they're like, yeah, we don't do that. And they've never shared money with their users. They're just starting to. I keep getting upsold on post what's their stories competitor or the TikTok competitor on Instagram? What's the TikTok competitor? Reels. Mm-hmm. I keep getting offered like $100 if I post a reel. So they're literally just trying to pay me per piece of content as somebody, because I guess I have 20,000 followers on Instagram. I don't really spend time there. I only post celebrity pictures. What
Facebook does, right? Like the reason that you can copy, the reason that actually people keep going to work for Facebook, like I'm sure that this all would be a lot easier if Facebook was a terrible place to work, but evidently it is not. It is a great place to work. People love it. They back up the money truck. They really, really take care of employees. And then when they want to copy something, they're trying to grow Reels to compete with TikTok. So they're literally paying people because they can, because they just get the flywheel going. Yeah.
All right. So anyway, we'll keep an eye on that. We'll see where it goes. I really don't trust Facebook. I would, if I'm, any company or anybody who has content, I just wouldn't trust Facebook because what they'll eventually do is try to extract something from you, like your money, and they really screw their partners. So you'd be an idiot to partner with them on anything. And that it really goes for building community. I think if you're going to build community, you could see like building community on Twitter kind of works, building community on YouTube works. They're really thinking about you and what your needs are. Building community on LinkedIn seems to work really well. People have a good experience with groups over there. It's never worked for anybody. They just don't treat content partners well at Facebook. Nope. It's not part of their focus until they start paying, significant rates to content folks in a broad way. I just wouldn't trust them.
Zach Coelius described dealing with Facebook as, quote, being coddled and feeling safe by Facebook and then being stabbed in the stomach and bleeding out slowly.
Anybody who goes to bed with them,
it's poetic.
Wake up. Yeah,
it's poetic.
Experience what your customer experiences with UserTesting. Whether you're launching a new product, a prototype, or a marketing campaign, you'll get great video feedback straight from the people who you want to reach most, your customers. The UserTesting Human Insights platform lets you understand it all from your customer's perspective, and it allows you to target your exact audience, ask any question or request to perform tasks, and most valuably, get a window into their world. And unlike focus groups, which can take weeks or months to deliver results, with user testing, you get to see real reactions and hear real opinions really fast. You'll get responses in real time and at the speed your business demands. Get insights into what's working and what's not, so you can adjust your message, refine your user interface, and understand exactly how people are responding to and interacting with your product, service, or brand. The result? You feel what your customer feels, so you can build the best experiences imaginable. So here's your call to action for a free trial. Visit usertesting.com/twist. Usertesting.com/twist. User testing, real human insight. All right.
Let's talk about what else is going on in the VC space, because we have been talking about this downturn and there are far fewer investments quarter over quarter. But some big news broke from The Information last night. If I had a penny, by the way, for every time I said that sentence, I also would be raising a $2 billion fund. Sequoia is reportedly raising $2.25 billion across two new sub-funds. Sequoia saw the VC slow down and was like, time to raise.
Yeah, keep going.
Tell me more. Yeah. All right.
Well, I mean, basically, if you're a legendary fund, this seems like it's news because, oh my God, we're in a down market. How could they raise it? Now, remember who they're raising from. They're raising from the same LPs that they've always raised from in all likelihood. They don't change the LP roster all that much. Everybody wants to give somebody like Sequoia money. Therefore, it doesn't matter when they raise. They are immune to the market swings. When they do a fund, people want to invest. The people who are investing are people with giant endowments. So some college with a giant endowment, a retirement with a giant endowment, or a nonprofit like Ford Foundation, et cetera. And as a Sequoia founder of a company, Inside.com is a Sequoia company, started as Mahalo, and we pivoted. That company, like when I go to their dinners, they would show us like, hey, we distributed money, just so you know where your work effort is going as founders, to the Ford Foundation. Here's what the Ford Foundation does in the world. Here's, I don't remember all of them, but
that's pretty cool.
Theoretically, here's Memorial Sloan Kettering. Here's what they're doing. Here's this endowment from this college. Here's what they did with the money. And so as you become even more baller in VC, you can pick who you make money for. You don't have to pick an authoritarian regime somewhere in the world, like, Jared Kushner, taking money from the Saudis. He's taking money from the Saudis. Some would argue, like, maybe that's not the group you want to make money for. They have plenty. And why would you want to make money for them? You may want to make money for cancer research. Like I've always told the folks at like Memorial Sloan Kettering and other places, like, listen, when you think you need a new fund, having two parents who are cancer survivors right now, I would really love to go to work every day and have you in our fund because it would just make it more meaningful for me.
Yeah.
And I think that's, one of the beautiful things about venture that people maybe don't report on is actually who gets the dollars. And in a lot of cases, people getting the dollars are people who could really put it towards good use.
That's pretty cool. I mean, just even the pension funds alone. The other thing I think that's really interesting about what Sequoia is doing, and I would love to talk more about this sub-fund idea, because Sequoia made headlines last year announcing that they were turning the main fund into an evergreen fund.
Yes.
The Sequoia Capital Fund to hold positions for longer as companies go public and mature, which is really interesting. They launched that Catalyst program that's sort of like an accelerator called ARC.
Yep.
And
Jess is running that. Yeah.
Yep. And then, and Luciana Lisandru. And then just a few months ago, we covered Sequoia China starting to raise $8 billion across 4 new funds. And then now there are these new sub-funds under the Evergreen Fund.
Yes.
Is this a new thing, the sub-fund thing? Is this sort of like what you have to do when you start to be...
OG funds is what I would say. The sub-funds are their original funds.
Yeah.
And then the Sequoia Fund is when these companies in these funds become Square or Google or Apple or whoever, WhatsApp, which then becomes Facebook, Uber, DoorDash, all of those shares don't have to be distributed and sold. You just own those shares in a percentage of the Evergreen Fund. So all of the exits, instead of returning the money and selling the shares, some endowment could say, you know what? Keep running it. Keep running my money for you. Because what happens typically is a venture firm gives the money to their LPs. Those LPs take those returns. They go to a money manager of some type or a committee that then has to manage those investments. Okay, do we keep our Airbnb and Uber and Coinbase? Do we sell it? Do we buy more? What do we do at this point in time when we get these distributions? Sequoia are going to answer the question for people. Hey, we got you into Square. We got you into Google. We know the companies. hey, maybe we'll stay on their boards. So I believe Alfred Lin is still on the board of DoorDash, and I believe Roelof is still on the board of Square. Usually VCs would get off those boards. Why? I've always thought this was crazy. Like, if you have that kind of influence in the world, why? Oh, so I can recapture my time to invest in the next generation companies. My position was always, those are seats of power and influence and knowledge.
Yeah.
Stay on them and then just hire more people to do more investing. So there are people who have different ambitions. I think Sequoia and Roelof and Alfred have a big ambition here of building this large public market, ownership position, because they never sell their shares anyway. So that's what's happening here. These funds seem to me to be the original funds, is how I would read it. And they're doing some experiments. I think they're a little arc, give $1 million to whatever number of companies, 10 companies, and do it once or twice a year. Like, it's a good experiment for them.
And then the other thing that's interesting is this split on this new $2.25 billion is a $750 million early stage fund, in keeping with the trend we've seen over and over, which is these mega funds moving earlier. And then also $1.5 billion for a U.S. growth fund, which seems to me to be good news, because what I keep hearing is that and you tell me if this is true, again, what I keep hearing rumblings about or concern about is this barbell effect, that there's a lot of money in early, a lot of money in late, and a valley of death in growth. I think that's true?
The best way to invest in tech and startups is to secure a position as early as possible, a large position, and maintain it, or to get in at the end when you can flip very quickly to a public outcome. The latter is now gone. So the idea to put a lot of money in at the end and then it IPOs and then it surges on the IPO. Well, the public markets aren't buying what venture is selling right now. Right. They don't want companies that are money losing, and they may not want more companies right now. They have this indigestion repricing going on. So in the short term, the late stage kind of spigot is turned off right now. It's paused. And so why would you put money there? Which means people will want to do traditional VC, hard work, find a couple of founders, back them, get them through an accelerator, get them their $1 to $3 million seed round, get some customers, get the flywheel going, and then do a proper Series A of 5 to 10 million.
But I guess what I'm saying is, what if nobody's there for the Series B?
Oh, there'll still be people there. What it will be is the Series B's valuations will come back down to 50 to 100 million. So the B's, when they became $250 million valuations, started to look like really growth rounds and C's and D's. I think what you're going to see is $1 million, you're going to see 100, 200K accelerator friends and family. Then you're going to see $1 million to $3 million seed rounds. Then you're going to see, $4 to $10 million Series A's and $10 to $25 million Series B's, as opposed to $50 million Series B's. So I think everything just compresses a little bit, and then these funds will be able to do Series B. We were able to do Series A's with our syndicate for a hot minute because we were putting in 2 million or $1.5 million or $3 million. So we could co-lead an A, but then people were like, those are no longer the A's. A's are now 10 million. And I don't think you need 10 million in a down market to raise a Series A.
So then you're saying that funds that are currently earmarked as early stage will be able to afford to be effectively growth stage.
Not growth,
because
but they'll go one stage later. And then people who are growth could go one stage earlier, and maybe they just have more dry powder than they thought they needed. So that's going to be a great outcome. If you raised a $500 million fund right now and you expected to put in, 30 companies at, 10 million each, maybe you could get the same ownership percentage for 7 million each, right?
But
so
is there a drought?
Companies.
Is there a drought in growth? Is the question I don't think
so. I don't think there will be, because I think companies will. Yeah, I think. Well, and also people were spending that money to artificially inflate growth, and maybe they were not spending it in a judicious fashion. So I think what's going to happen is people are not going to spend like drunken sailors. So maybe they won't be buying stadium rights, or $400,000 developer salaries will go back down to 200 or 150, and people will just be more judicious with how they spend money. And maybe not like the crazy signature office space at $90 a square foot. So you're just going to see people, the amount of money it takes to make money will compress as well. So people will be able to do more with less money in a down market, which you're already going to see. I mean, you see it inside of our organizations where I'm working with people on their efficiency and their professional development. I think in a gangbusters market, people are like, I can just throw people at this. Yeah, just add 10 people to the sales team. As opposed to looking at the sales team of, let's say you had a sales team of 50. You could add 10 people. by just making everybody 20% more efficient, which could be professional training, could be time management, could be incentives, could be any number of ways to do that. And, people were just throwing salaries and an escalation in a bidding war for employees. Now the bidding war is over. I think we're going to see the 11 million jobs we have open, of which I think 3 or 4 million are professional. And of those 3 or 4 million professional, probably 1 million of them are in tech. You're going to see those compress really quickly. So those are going to get filled really quick. So as everybody cuts 15%, all those open recs are going to start to get filled. And they'll probably get filled at a slightly lower salary or a flat salary. And as I've said, we saw that buyout of Zendesk. That to me was a bouncing along the bottom moment. I think we might see a couple of other bouncing along the bottom moments, which could be pay cuts coming in companies. Just like we saw offers being the rug pulling offer. You haven't even started and your offer got rug pulled. That's a sign of a dark market. So being a concise communicator is so important, especially in a down market. You literally can't afford to have breakdowns in communication. Well, luckily, Grammarly makes professional writing fast and simple. And I love this product. It's an all-in-one writing tool that helps you churn out clear and concise communications quickly. So whether it's mass emails, board presentations, or sales contracts, Grammarly helps you find the right words to communicate efficiently. I can tell you, having written my last book without Grammarly and writing this new book with Grammarly, I basically have eliminated the need to have a copy editor with me all the time. They have a free tone detector. It's going to make sure you're making the right impression. Grammarly Premium. It has awesome features like clarity-focused sentence rewrites that help clear up any confusion. And they can tone transform to help you convey confidence with ease. Grammarly is free to download as a desktop app, and it works anywhere you do. So you can work more efficiently on all your projects. Get to the point faster and accomplish more with Grammarly. Go to Grammarly.com/twist to sign up for a free account right now. And when you're ready to upgrade to Grammarly Premium, and I know you're going to want to, you're going to get 20% off for being a Twist listener. That's 20% off at GRAMMARLY.com/twist and let them know your pal JCal sent you.
So if Sequoia is consolidating power, so is Sam Bankman-Fried.
Oh, there you go.
Yeah. I'm skipping ahead to this
breaking news while we're taping the show at 11 a.m. June 30th here.
Yep. So breaking news as we are taping, which is that evidently FTX and SBF, FTX is acquiring BlockFi, straight up buyout for $25 million. That actually is million with an M. That's 99% below BlockFi's last private valuation. The New Jersey-based company was at one point last valued at $4.8 billion. And of course, Sam Bankman-Fried has been going around, backstopping / consolidating this industry almost under single ownership.
Yeah. So it was the last private market valuation of BlockFi was $4.8 billion. I don't know how many customer accounts they have. But we covered just the other day that he gave a $250 million credit line where he offered it, which would wipe out all the previous investors. We discussed this. If you have no offers, the only offer you have is the best and final offer before the company goes out of business. So people take it. And I know Pomps, Morgan Creek Digital was trying to make some kind of competing offer here. But for $25 million, he's basically buying these assets. And it's probably, I don't know how many customers they have, but how many BlockFi customers are there? I mean, this is stunning.
Yeah. I mean, this is just a massive, it's weirdly gutting the unicorn and pulling out the organs.
It's just taking the horn. It's dark.
Just taking the horn.
Just shoot the unicorn, take the horn.
Oh, I'm so sorry. It was apparently close. BlockFi was close to finalizing a down round that would have valued it at more like $1 billion. But even so, this $25 million is a pretty brutal outcome. This is according to a report from CNBC, by the way, we should say at this moment, that was citing sources close to this. But it said that they were very close to this deal. Yeah, I guess those other investors are not only wiped out, but not really paid back.
Check this out, Molly.
Yep.
As of March 2021, we just found some web research here, so we'll have to double check it. But it seems as though BlockFi had 265,000 funded retail clients and over 200 institutional clients. So we take the 25 million and we split it equally between those two types of customers, 12,500,000 divided by 200 corporate clients is 62,000 per corporate client, and divided by 265,000 accounts from retail, that's $47 per account. So the CAC here is basically $50 an account. That's pretty extraordinary to, think about how much advertising or, crypto is hiring whoever, like Matt Damon, or buying the Staples Center or whatever place they bought to get these accounts. They were probably spending hundreds of dollars per account. So this is a way for him to just, boom, all of a sudden, scoop all that up. Now, how many of those are real accounts, or how many people of the, if maybe half of those stick around, if half stick around, now it's $100 customer acquisition cost. But I think this is probably what, if you really do believe that crypto is real and you're Sam, okay, you just made a pretty savvy trade to consolidate market share. So
yes. Or as Francis Santoro puts it, I ate his liver with some fava beans and a nice Chianti. It's so interesting, right? How he's just this character who will end up, somebody had made the comment, one of our noties had made the comment when we talked about it before, that he could end up the world's richest man by 2024 if crypto rebounds, and he owns increasingly significant chunks of it in a lot of accounts.
Yeah.
It is pretty remarkable.
It's an account roll up. Yeah. If you believe that these accounts are going to, be super valuable, who knows what the duplicates are between this and other assets he wants to buy. But it seems like at 25 million, it's a low risk strategy for him if he's got tons of Bitcoin laying around or tons of other crypto assets.
100%.
So,
and I still maintain that yes, it is an account roll up strategy. It is also a prop up the ecosystem strategy. I really think it is, because if he's the only person in the position to do this, then one, it's smart to be the vulture, but it's also like, if that's where all your money is coming from, you cannot let this unicorn herd die.
If it did die, I guess what would happen, they would be all these accounts are going to be in some sort of bankruptcy process where their, accounts are held. So yeah, that probably is part of this.
Apparently, according to Nick, he recently told that to Forbes. That's good. He's getting
he told Forbes that, I think what he said is a lot of these exchanges are secretly already bankrupt. So his theory is a lot of these folks are bankrupt already.
Yeah, so he also said he doesn't care if they're bad investments. He needs to do it to save the ecosystem. I'll pull the quote in a second. I'm just grabbing it right now.
So, but this seems like a solid investment, actually, if I were to look at it. So savvy move on Sam's part, I guess. We'll see. It will either look like crazy, like buying up all the dead .com brands, and just having their web pages and non-functional businesses and no employees. Or, it could wind up being super savvy move if crypto rebounds. The chances of crypto rebounding now, I think this is like a big flush of all of the, what they would refer to as the coins. I think all of those, you can bleep that out, but all of those ish coins, I think, are going to get wiped out. Nobody's going to have faith in them. And then there'll be a couple of projects that stick around and people will keep playing with them. But the amount of regulation coming and the amount of lawsuits coming because everybody lost their money, there's no way for people to get their money back, right? We would agree on that, Molly? Like that money's lost. If you
that money's gone. There's no backstop there. There's no, FDIC version of SBF here to protect your money. If you lost it, it's gone.
It's gone. So if these projects then have Luna's not coming back, right? Just as but one example. Or some NFT project where people bought NFTs for $10,000 and now there's nobody buying them, or they're buying them for like $10 as a joke, which we saw like some of those kind of things going on. If all of that is truly, washed and not coming back, that means there's going to be lawsuits, there's going to be investigations, whatever, hand wringing about that. That takes years to work out. And this is what happened in the .com era. I have the scar tissue. Is nobody trusted entrepreneurs and .com for maybe 5 years. And then when Delicious got bought by Yahoo, Weblogs Inc., my company, got bought by AOL, Flickr got bought by Yahoo, there was a slow, these are real businesses. They are doing some real stuff in the real world. Maybe we should buy some of these companies. Maybe there's some real business here. But people really didn't buy it. They thought, there's Amazon, there's Google, there's Yahoo, but most of this other stuff is garbage. And it's not like any of those companies came back. iVillage didn't come back. Pets.com didn't come back. Like they were gone forever. That's what's happening here. I think a lot of these projects are gone forever. They're not coming back.
Yeah.
And it'll take 3, 4, 5 years of actual delivering of product and delighting users for this to actually start again.
And this is going to sound like a random twist, but it feels a little bit like the collapse of the Soviet Union. Like this is a moment where oligarchs can be made because these assets are just floating around there, right? Like, so when the Soviet Union fell apart, I know this feels random, but it just popped into my head and I think it works as a metaphor. You had all these people who were like, oh, I was able to acquire this stockpile of plutonium, or I was able to like, sneak in here and get all this oil, or I was able to do this or that or whatever, when there were no rules and nobody was looking, and people made off with billions. And I think this is a moment where that's happening, and there might be some unraveling and some investigations, but there are definitely people who are going to make off with billions. And frankly, a lot of people who should look at what SBF is doing, and if they have the capital, like do a similar version of that, because this is your moment to make off with a stockpile of oil that's going to be worth a lot later if you believe this ecosystem is going to continue to grow and develop into real products that delight users, which I see no reason why it's not, to be honest.
It's possible. NFTs that were part of the first wave are like, internet companies that were part of the first wave. They tried. It was too early, too complex. They weren't refined enough. They didn't get product market fit, whatever the case is. They got wiped out. But then the next Web 2.0 companies actually did fulfill the promise and create cool products and services that people liked. Yeah. So we'll see. I think also the $25 million number, I'm guessing, is on top of the $250 million credit line, which would then put the price at $275 million. I'm guessing there were no other people who were willing to buy this. And so if you've got a startup that's failing and you've got, 3 months worth of money left, you're not going to be able to run a real M&A process. So I'll have founders come to me. They're like, you know what? We tried to raise money. Over the last 6 months, we couldn't raise money. So now we're going to start an M&A process. So when they knew they were in trouble with 9 months of runway, they did 6 months of meeting with VCs, couldn't raise money. And then with 3 months left, they started an M&A process. And guess what? An M&A process takes over a year. So you have to, like in year one, or let's say it's a 2-year process, you spend like 6 months to 12 months getting to know, doing listening tours, meeting with potential acquirers under the auspices of trading notes and socializing and maybe potential partnerships. And then maybe the next year they make you an offer. So if you think of it like a 2-year process, you're kind of you're circulating around the circuit, getting to know people, doing conferences, meeting the BD people, trading notes, in this little dance that eventually winds up a year or two later with an acquisition offer. You can't do that. You can't compress that into 3 months. You can't compress it into 6 months. It just never works. So who comes? It has to be a crazy mercurial CEO who says, I want that asset.
Who has just a ton of money. Yeah.
Yes. And who has the decision-making power, right? So if you go to if you were a founder, you have 3 months left of runway, and you go to the M&A person at some big company, let's say you wanted Microsoft to buy it, you get the M&A person on the phone, you share the asset with them. They're working on 10 other M&A deals, of which 2 will close. They're not going to stop everything and try to find, their boss and their boss's boss and the unit head to get your company fast-tracked to do a 3-month purchase. It's not going to happen. You're going to go out of business. You'll almost be better off just shutting down at that point and putting it into cockroach mode, and trying to slowly find somebody to buy the assets, but it just never works. So that's just a micro lesson on M&A. Yeah. You can't do it in 3 months.
CNBC, in its original reporting on this, cited some of those anonymous sources saying there was more than one deal on the table.
Oh, okay.
But it does make me wonder if the other deal on the table, probably from Pomp and those other equity investors, would have taken too long. They would have gone under in the interim, right? Maybe there was not even time to cockroach there. I don't know. But it sort of makes it sound like instead they took this FTX offer. I don't know.
According to that same story, or the Forbes story, Sam said that FTX remains profitable, has been for the past 10 quarters. So it sounds like he's ran his own business to be profitable, which means in a market like this, you don't have to make a ton of cuts, and maybe had a lot of cash runway. Yep. The people who ran their businesses conservatively in an up market look stupid. Oh, they should have gone faster. They should have gone harder. They should have built market share. And then when the market corrects this hard, they look smart. So hopefully I'll look smart with the inside and launch like, oh yeah, I was conservative. I kept cash reserves. I didn't overstaff. And I think the same thing here. Maybe opportunities emerge, right? So maybe there's some bailing. Yeah.
I'm going to put $300 behind Shiba Inu and become an oligarch. Let's go.
I don't think it works that way, but yeah. But Coinbase has been losing money, right? And so, they've been investing, and he's had to make a lot of layoffs. Now, of course, they did become worth, I think at their peak, like maybe, I don't know if they were close to 100 billion, but it was definitely above 50 billion. Now the stock's down 90%. I'm fascinated by Michael Saylor.
I can't get enough.
Me.
It's literally, the future is going to be a war between these two guys.
I actually want Michael Saylor to be on This Week in Startups.
He DM'd you? Come on.
I gotta get him on. You know what? He DM'd me, and I've said such crazy stuff about him. I'm not sure what this is going to be. If there's going to be another Palmer Luckey situation where he just comes on the show and reads what I said about the crazy behavior.
You can handle it.
Of course I can handle it. Everybody knows, or should know, who listens to this program. There's a company called MicroStrategy. They have some core business, and they were public. The CEO, Michael Saylor, who has a bit of a sordid background, I would say. There was some SEC action against him previously. I'll get the exact details of that and tell you at the end of the story. He took that company and then essentially turned it into an ETF, de facto ETF, not a literal one, where he started buying a bunch of Bitcoins. And he started taking loans to buy Bitcoins. And he's the person who I've played the video before on the show, Molly, where he said, listen, if you believe in Bitcoin, the only logical thing to do is sell every asset you have. If you own a business, if you own a home, and acquire more Bitcoin. And to his credit, he has continued to do that. I think his average price was in the $30,000 range for buying Bitcoin, and now it's gone down. And he just announced that MicroStrategy has purchased an additional 480 Bitcoins for around 10 million at an average price of 20,817. That was his tweet. As of 6/28/22, MicroStrategy holds around 129,000 Bitcoins, 130, let's round it up, that were acquired for about $4 billion. And I think he's down $1 billion based on that average price. We were bouncing around 1920 today. So.
Yep. They're not, again, he's going for full oligarch status here. There was a pretty good breakdown in the Matt Levine newsletter. I love that newsletter, about MicroStrategy's version of this, sort of comparing how, Three Arrows Capital and Celsius had done all of this like borrowing and lending with only coin as collateral effectively. And then in some cases rehypothecated that collateral, like put some Bitcoin up as collateral over here and then or taken someone else's collateral, taken Bitcoin as collateral to lend them money, and then taken that same collateral and then borrowing against it. So essentially using it in two different forms, like reaping it as collateral and then using it, putting it up as collateral.
A little dangerous if that's true, yeah.
Right. And so Levine was pointing out that MicroStrategy has not really done that, that this is, these are leveraged buys of Bitcoins that are leveraged by money and not other coin.
Right.
So that ultimately, if there were a margin call, and Michael Saylor has said this many times, that MicroStrategy would be okay, that his balance sheet could actually absorb
They could just give
this.
more cash.
They could just give more cash.
They could just give more cash. And just for the background, the SEC today said MicroStrategy, this is a story from 2000, MicroStrategy Inc.'s top two executives and its former chief financial officer agreed to pay a total of $11 million to settle civil accounting fraud charges related to a restatement of the software vendor's financial results last March. So they had to restate these, and they made significant changes to fix it, yada, yada. So, that's more than that's 11 million in 2000 was more than a speeding ticket. Let's just put it that way. That was on the high side of fines. Today, you might think something small like that, might be a little bit of a slap on the wrist. So that seemed more significant. I don't suspect somebody who did that in the past would do it again. After having that experience, they would probably have better accounting now. And I'm sure there's two sides to every story.
Yes.
So,
but there's no question that this guy is all in on it, and you should take
got conviction.
You should take investment advice from lots of different sources, not just the one person who's like, sell your mortgage.
All their reserves are on the blockchain now. Can't get funky about that. It's transparent.
Yeah, exactly. The SEC can just totally transparent, except if they were taking those Bitcoin and trading them off the chain, and who knows what's happening. We have no idea what's going on here.
Very funny tweet by Packy McCormick on this topic. from the Not Boring company saying the year is 2140. There are 21 million Bitcoin. Michael Saylor owns all of them. Michael Saylor is now immortal. MicroStrategy has long since folded. His Bitcoin are worth $13.93, but they are his. He is happy. He will be happy forever. There will only ever be 21 million Bitcoin.
No, that was his constant refrain on CNBC is like, listen, this is finite. You can't print more money, which plays into this narrative that, the Fed's printing all this money. Bitcoin has a limited supply. Therefore, Bitcoin will be, a hedge against the dollar, but it's traded exactly in sync with the money printing machine, as Chamath's pointed out on All In, and other people have pointed out much more eloquently than I will. It seems to move exactly with growth stocks in the stock market. In other words, it moves with people's discretionary spending, is what it seemed to do. And it's quite possible, we were looking at a chart the other day of the average monthly price of Bitcoin. And when you look at what happened during the pandemic and all of this extra money was printed, stimulus went out, the free money environment, that kind of crescendoed in 2020, 2021, that's when all the growth is. And if you look at the time before that, it was kind of trading in that $3,500 to $10,000 range, which means if it's going to reverse, it's going to get cut in half or 75% from here. And there are people who in the community believe that could happen, that it could go down to 5,000 to 10,000. So be careful here. If you want to build a position, you might want to do that over time and might want to make sure that it is a portion of your portfolio that you're willing to lose, and it's in the highly experimental bucket of your investing where you could afford to lose it, is how I would think about it, or it is how I think about it. Actually, I should say 300. I think about my Bitcoin holdings. I'm a hodler, and I'm saying that I've actually been thinking I might buy some extra Bitcoin at some point. Looking at it, like I think
the
Bitcoin
FOMO
is built to last. It's not even FOMO. I just think if it hasn't been compromised yet, and it's a good store of value globally, I believe that citizens around the world are embracing it as a place to store their wealth, which means if there's a finite amount of it, it should continue to go up as people need it and require it as the global standard for people who don't have a great banking system, or have a government that prints too much money.
Yeah, me too. Same. Okay. $300 at a time, for sure.
There you go. All right, let's go to We Live in the Future. This is what everybody loves. We live in the future.
We're just going to have some fun for a minute.
Yeah.
Major League Baseball. This is highly controversial. Major League Baseball will likely be introducing an automated strike zone system, aka robot umpires, starting in 2024. Commissioner Rob Manfred told ESPN that the automated strike zone system may call all balls and strikes and then relay the information to a plate umpire, or maybe be a part of the review system that lets managers challenge calls, the reply review system. In recent games, some fans have had some meltdowns due to missed calls in umpires. Apparently there was an insanely low strike error during a Detroit Tigers and Minnesota Twins tilt, and the MLB has been experimenting with robo-umps in the minor league Atlantic AAA since 2019. Should we watch this video
of this?
I think we do. I want to see the especially bad call.
Oh, we're going to see the especially bad call. I want to see the robot. I want to see the robot who makes my coffee, and then on the weekends or at nights, instead of making my coffee, goes and does this.
So for those of you who are not watching this on video, the ball is roughly 2 feet below what would commonly be agreed upon.
That was a terrible call.
Yeah. It's like 2 feet below the strike zone. It's like practically in the ground.
Okay, let's take a look at show us the actual.
Yeah, so let's have a picture of the robot, which would basically just be like, I'm the strike zone.
How come we don't have video of the robot? If they're doing video of the robot in AAA games?
I don't think it's a robot. It's just like a series of sensors.
Oh, they call it robo-ump, right?
Robo-ump.
Okay, so here's what it is. It's literally...
It's a sensor wall.
It's a wall. It literally looks like a panel from a roof panel. Yeah, that's just sensing where the ball is. I mean, it's so obvious.
It's the physical version of the box that they show on TV is really what it is. And so then it would just sense if the ball is inside or outside that boundary and then make the call appropriately, which I'm sorry, I think is not a future that I want to live in. I want to argue over calls forever. I think that corruption and, capriciousness is built into baseball, and that's what makes it great.
So let's take both sides of these. If you care about fairness, you would want, and having the correct outcome, you would want a robo umpire.
Yeah.
So I, believing that the Knicks have been robbed for many years from winning games because of the umpires. That's my belief, is that the umpires have it in for us. No, I don't believe that. I think we just have been terrible.
Everyone believes that. Are you kidding me?
Well, no,
the Raiders. Remember all the years that the Raiders were in Oakland? It's just
anyway,
like, you're the
this
Raiders.
Puts to bed this would put to bed all of the rumors of corruption or umpires playing favoritism or having unconscious bias. They like a certain team. They like a certain group of fans. They like a certain player. They are friendly with somebody. So removing the charmingness of an umpire kills the experience, but having the game be called properly would be much better. And so let me ask this. In tennis, do they use...
It's totally different than basketball. Because imagine if,
totally
depending
different
on the referee you had in basketball, the 3-point line was further out or closer in. That's what it is. Because every umpire has a slightly different strike zone. It's totally different. It's crazy.
Yes. Yeah, it's not... And should the strike zone in some way be related to the size of the individual?
It is.
So it is. So a larger person has
right
a larger
above your knee to right below your chest is the official.
So it is a dynamic thing. It's not like if you were Kristaps Porzingis and you're 7'1" or 2 or 3 or whatever he is, you have a different 3-point line or a different free throw line than a 6'3" Steph Curry or something.
But you do have a different strike zone, right? So then what would they do with how would the robo
I think the robo knows where your knee is. I think the AI can tell where your knee is.
The uniforms would have sensors on them.
Yeah. Oh, okay. That's an even better way to do it. Is the uniform has sensors on it. Would be easy if you had something. But then you would you'd be adjusting the sensor a little lower, a little higher. I mean,
but that's kind of the fun about baseball too. Is it's such an old sport that they actually allow you to cheat. But when you get in trouble for cheating in baseball is when you use an Apple Watch to cheat. You're allowed to steal a sign with your eyeball, but if you use an Apple Watch to thumb your hand, then it's cheating, right?
You so there's always little
weird.
The tar and the bats is a good one.
I want all of this. I want you to have a little pine tar on your helmet, and I want you to be able to buy off the ump. I want to sit behind home plate and scream at the ump. Otherwise it's just robots playing a game. Boring. And baseball's boring enough.
The reason
it's boring, away the controversy,
they need to bring steroids back. They need to bring
what do you even have?
You want to make baseball fun?
It's way too slow. It's way too slow. There's too many games. Cut the number of games in half.
So don't put in robots.
And put in robots. This is my official. And then the game's got to move faster. That's the whole thing. So how many innings is it? 9 innings?
Corruption and capriciousness.
Let's bring it down to 7 innings.
Way.
Bring it down to 7 innings. Let's make this a little faster. You don't need to do 18 holes of golf either. That's ridiculous. Just round. It should be 10. Everybody just wants more time away from their spouses. That's the intent of these things. You want to get away from your family for the longest period of time. I know the guys in my circle who are really into golf and who are really into baseball. And they love going to those baseball games and they love going to golf, Molly, because they got to get away from their families because they're losing their minds. And they want an excuse for a whole day away. You go to baseball, that's a whole day away.
And they might have rage issues and they need to get those rage issues out. And that's why you have to be able to yell at the umpire. And if you don't have that, if you have that taken away from you, you're going to start to see these rage heart attacks happening because you need an outlet for your anger. And that outlet is your cheating ass umpire.
No,
it's America.
The statistics are perfect. Look, it uses a system that was created by golf measurement devices from a company called TrackMan. The technology for the minor league identifies and tracks pitches location, and a phone tells the umpire if it's a ball or a strike. After they're notified, the umpire can make the call behind the plate. So you still get your umpire, but the umpire is not making a decision. The umpire is now an actor.
The only thing
we can hire all types of great actors. We could have people from Hollywood. We could have people from Broadway. We could have people from vaudeville. They could all would be about the flourishes of the call.
Jason Bateman.
Jason Bateman could be a great ump. You could. What about
strike three?
What about Zach Galifianakis? Could be great.
He looks like an umpire.
Any fat actor could be great. Any fat comedian would be amazing.
The only thing I like about the robo umpire is that they do say it would shave 7 minutes off of
9 according to the MLB.
All right. That's because the review system is what broke it. But previously, you had America's favorite corruption and capriciousness, and you would just yell at the ump, but they would move on without you. Forget it. And then they introduced this fakakta review system to be like, oh, well, let's make it fair or whatever. When it's just like, no, just throw the ball, yell at the umpire, move on. That's the game. That's baseball.
Yeah, no. And I think this has to come to everything. We should have this also for tennis. Tennis is already using stuff, right?
They do. And so does soccer, football.
So enough. It's enough with the humans ruining the game and taking too much time. The umpires, gone. I want them gone. That's it.
I bet a robot could pick companies to invest in. I'm just saying.
Yeah, good luck.
You want to take the human out of everything.
Well, okay. No, I don't think it would work. There are people who want to do it in the public markets when you have more data. People have pitched me on AI to sort through companies. And we are doing, this week we hit another record in terms of the number of companies we sorted, the number of companies we met with here at launch. So looking at that, I do think AI will probably be able to make some reasonable sorting efforts at some point. We're basically building heuristics for humans to do, but that might be, a 10-year journey. Baseball has reviews.
You're just writing us out of history right now, Jason. Writing us out.
No, I think humans move up to a more interesting thing to do. There are more interesting things for humans to do than say this is a ball or this is a strike. I'll be honest. If the computer can do it better and do it more consistently, let's move on to the next thing. Unless you want to do it as like a Civil War reenactment. Like right now, what they're doing is turning the umpires into Civil War reenactors. Like it's kind of insulting to them. It's like they're turning them into cosplay.
It's horrible.
Like if the umpire is like the computer's like, tell them that was a strike. You will comply. Yeah. Tell them it's a strike.
Why do I want to watch this? Why do I want to watch this game? This is a terrible game.
That's going to be great. Take the 9 minutes out. Fantastic.
They need them less in Major League Baseball. They need them more in like suburban little leagues where you have 15-year-olds.
Oh yeah, those crazy dads
games for 9-year-olds, and the 15-year-old's like strike.
Actually, yes.
He's getting screamed at by like 40 drunk dads.
For sure.
That is true.
That's where they need this.
Robots for amateur sports
would be great.
And then let me just still yell at them in the major leagues.
Or I will say, there is a compromise to be had here. How about this? How about we compromise on an actual robot who is actually trained to get 1 out of 100 wrong in a pretty egregious way, and then we'll get in a fight. So there's a randomization. Every 20 pitches, we're going to do something crazy, and the robot will fight with the umpire. We'll fight with the manager and the players.
I feel like if you pitch that to Elon, hard enough, you would make the Tesla bot do that.
That's what I'm saying. The Tesla bot.
This
is good.
Yeah.
Those
That's
Tesla
what I like
bots,
about J-Cal. Always finding a way forward.
Yeah,
I'm trying to compromise here. If the Tesla bot has to labor and like create batteries all day, they might want to do this on their day off. They might want to be out at the park. This could be a great compromise. Tesla robot gets time off. Strike 3.
Strike
ball
3.
4.
You son of a...
If you argue with me one more time, I am going to send you out of here. Out of here.
No one's
out of here.
Do not kick dirt on home plate. Please do not kick dirt on home plate.
I need to see your bats. That looks like more than 18 inches of pine tar.
Do not throw the bat. Do not throw the bat.
Take your hat off. Let me see your hat. Is that sandpaper? I detect you're scuffing the ball. Oh, God. It'd be so great.
The singularity is here.
It's so great. I mean, it's just all the places you don't want a robot are going to be the interesting ones, right? Like there's going to be a lot of places where you're like, robot, perfect. Oh, you want a deep sea dive and fix the pier? Yeah, send a robot.
Definitely.
But there's going to be other times when you're just going to be like, probably don't want a robot doing my umpiring at baseball or like a massage. Like robot's going to do a better job and be cheaper, but a massage with a robot's kind of weird.
It's so human to roboticize all the wrong things. That's just classic.
I don't know what I mean. Robotic lifeguard. I'm kind of on the fence. I kind of like the idea of a robot coming out and saving me.
Yes.
Yeah.
And to have like perfect vision, right? To be able to cut through the crowd and see the kid on the bottom and whatever. Like, yes, please.
Or you could have 100 of them. They could be out there already. They could be like a robot in the ocean positioning itself between the swimmers dynamically. So it's always within, 30 seconds as opposed to playing Bejeweled on a with their sunglasses on, taking a nap, listening to a podcast.
Yeah. See, now we're talking.
Now we're talking.
Stay the hell away from baseball. Okay. All right. Should we, we've had so much fun. Are we going to buzzkill it with talking about media a little bit here?
We'll start with the shutdowns and the buyouts, and then we'll go to the layoffs.
That was your rest. That was your 7th inning stretch, if you will. And now back to the news. Back
to crazy news. Okay. Substack, as everybody knows, has raised a ton of money to go after email newsletters. They did a lot of guarantees where they paid people hundreds of thousands of dollars, perhaps millions, to start their newsletters over there. Stratechery was kind of their inspiration. You saw Stratechery, was making millions of dollars a year off of a $10 a month subscription. And I think they credit that as like being like part of the concept here. Antonio Garcia Martinez got a bag. A bunch of people got a bag.
Greenwald got a bag, I think.
Did Greenwald get a bag? Yeah,
I think
they were giving bags out to everybody.
Yeah. They were giving bags out to a lot of white guys.
Which was okay.
No, there was a whole thing about that.
Was there? Yeah.
Yeah, it was a thing.
God, I just thought of a great inappropriate joke that I would say. Anyway, I don't want to get myself in trouble with this.
There's going to be a Robot J-Cal if you don't watch it.
Hold up. Now here's my new...
Anyway.
Well, I mean, I don't want to say it, but an anonymous account just in our YouTube Slack said, well, they were backed by Andreessen Horowitz, a bunch of white guys. So they're just passing the bags down the white guy train. I didn't say that. That wasn't my joke. That was a joke that came in independently.
It was from somewhere else.
From an anonymous YouTube account. That was not my joke. The white bag came down from Ben Horowitz to them, to their white writers.
I mean, that's why that tech bro culture thing, again, that hearing that's happening right now is like, hey, we noticed. So anyway, Substack was most recently valued at $650 million in a Series B back in September of 2021. They had raised $83 million. Had, I think, said at some point, no, we're doing great. Our plan is to grow the team and not do layoffs. Mm-hmm. And then now there has been a report that Substack laid off 13 employees, which is actually about 14% of its staff. It's pretty like lean organization.
Yes. I mean, it should be. I mean, it's MailChimp 2.0 on steroids. Like they have some good social features on it. They made an app, but you really don't need a lot of people to run this business. Let's be honest. A modern app takes a dozen people. So they probably have 12 people on the app team. To build the site and the service, that's probably 20 people at the scale they're at, 15, 20 tech people. They probably have a lot of business development people, trying to recruit folks, and who knows what the other folks are doing. But that's a big valuation. So let's look at, and it happened in September 2021, their Series B at 650. They raised a ton of money, smart move by the founders, but their business model is 10% of the revenue of their writers. In other words, it's a really bad business.
Yeah.
If somebody gets to scale, I pointed this out, you would be overpaying for their service even at 10%. So let me slow down and just, because I looked at this business with Inside, like, hey, maybe we should do something similar long before Substack even existed. And I said, this is a terrible business to be in. Let me explain why. This is a terrible business as I saw it. Now, they may have a different plan, and typically founders start somewhere and then they add 2 or 3 things. So again, just the business as it exists today is a terrible business. I'll explain why. They probably have a couple of million paid writers, right? So Substack told Axios in late 2021, the top 10 writers on the platform collectively generate $20 million in annual revenue. Okay. So 10% of that would be $2 million in revenue. Now, let's say,
but then yes, absolutely. And that's assuming they get that 20 million, because they also, according to the New York Times, separately told investors that it was only 9 million.
So that was last year. So here's how that math could work out.
Yeah.
They could have given people advances where they don't get any of the money or something like that. Remember, they were giving these big advances for a year or something like that.
Yeah.
And some people who they gave the advances to, I believe, regretted it because they made more money. So in that case, Substack made a good trade, right? So let's start via, is 10% of subscription revenue a good business? If you had 10 employees and they each cost you $10K a month, you can roughly use in a tech company a 10 to 20K a month per employee multiplier. Obviously, developers might be $250, but an accounting or an operations person might be, or customer support rep might be 40, 50, 60K. So you blend all those numbers together. I always use back of the envelope, 10K per employee per month for a company outside of Silicon Valley, but like a really intense Silicon Valley company, it might be 15 or 20. 10, if you have 100 people, which is what they had, if they were spending, 15K per a month, that means they were spending $1.5 million a month, which means they're spending $18 million a year. $18 million a year. They, were making 2, they're probably losing $16 million a year, something like that, right? And who knows what their other expenses are as well. Now, here's the key problem. If they were to 10x revenue with these top 10 authors, and who knows, maybe there's some other authors, and they got to 200 or 300 million, they'd have 20 million in revenue, 30 million in revenue. In other words, they'd probably be able to break even 10x from here. It's never going to be a great business is the problem. And I think what they wanted to do was build a bundle. Now, when they had this concept of the bundle, where they told people they could subscribe to a newsletter, and I think Platformer was the one that was, kind of broke this down multiple times, or they talked about it on another podcast. The writer from Platformer will come to me in a second.
Casey Newton.
Casey Newton, very smart. Casey was talking about like, hey, dummies, I want my email addresses. I don't want you to obscurify that and send people to an app. I want them to get in their email box. Please stop doing that. And he was sort of speculating that this was a power play by Substack to get control of their writers and then bundle them. I might be misrepresenting his position a little bit. That was the sort of sinister thing I think he was holding back on. And they give their email addresses to all of their customers. Unlike Facebook or Twitter or YouTube, you don't get the email addresses. That's why I always say you should collect the email addresses. On Substack, you do have the email addresses, which means you could leave. And Twitter now has their version connected to your Twitter account, and it's free. Or I think it's close to free. And then there's Ghost and other places that will let you build this, or you could build it with a developer for basically for free. It's kind of like not a difficult software to do. If you were to be making $1 million a year, or let's say you got to $3 million a year, like you were really like an elite one. Stratechery probably makes more than that. But if you made $3 million a year, would you give $300,000 to Substack? You could hire 2 full-time developers to build something doper. So if you're Casey or you're Stratechery, wouldn't you rather just have an in-house developer and 2 researchers working for you? Like you could spend another way to spend that $300,000 of your $3 million.
Yes, absolutely.
So you lose your top people. I know this, and I'm not beating up on Substack. I think they built a beautiful product, and I think they're reasonably innovative founders and obviously extraordinary at raising money. The reason I bring this up is I remember the early days of the internet, there were what were called web representation firms. They would take a website and they would represent their ad sales. The reward you got for I think they got 30% of the ad sales. The reward you got for selling ads for a website was they realized, I'm giving you $500,000 a year. I should just start my own sales team. And I should have the direct relationship with the advertisers and not have you obscurifying, which is what everybody wound up doing. Gawker, myself, Weblogs Inc. But this was even in 1.0. So it's just not a great business, it turns out, as currently constructed. The only way it would become a great business would be, and it would be a better business, would be if they actually hired writers and then built millions of subscribers. And then if the writer getting paid, I don't know, $100,000 a year, wanted to quit or wanted to raise, you would have 10 other writers to replace them. And you get the arbitrage between 100,000 or 200,000 writer salaries and whatever, $1 million in subscribers. And
so then they would just be like a media business.
And you'd be a media business.
Exactly.
Like the New York Times. So the New York Times is trying to deal with this right now, right? And they just lost Kara Swisher because she wants to own her work, is what she said. So now Substack is opened a can of worms. Casey can never go back to work for a big media brand. A media brand can never afford him. So now all of the best of branded journalists are now independent, freewheeling entrepreneurs who will never go back to work for somebody else. That's what Substack did. And to Substack's detriment, in fact, because why would you stay on the platform? They're going to be so entrepreneurial. Casey's going to realize at some point, well, I should just do what Stratechery is doing and hire somebody.
And I think Substack, I wonder the extent to which Substack and other creator tools rely on the idea that there's more talent than there is. And I don't mean to say that everybody's untalented, but I think what you find is that generally, there's a top 10% of YouTube creators who make all the money. There's a top 10% of writers on Substack. Yeah. Or sorry, 1%. Exactly.
I would say 1%.
Talent is not, in fact, evenly distributed, even if you do a good job of elevating and paying for it. And so you always find yourself in this position where you're like, oh, I'm going to try to pay more to acquire the good talent. And then there will be this long tail of other talent that makes money. And maybe the long tail part doesn't work out the way that you think it does if you're just talking about this kind of like independent media creation thing.
Here's another way to say what you're saying, which is the ability to be a brand and to draw these kind of subs is
limited.
Rarefied air.
Yep.
Even this podcast, it took me 10 years to, push this boulder up the rock. You also have to have the ability maybe to do it for 3 or 4 years at a discount. Stratechery, I'm sure, took years to get where they are. And there's a certain number of subscriptions each person can maintain before burnout ensues. So there is, like we saw in streaming and we see in newspapers, there's an upper bound. Maybe in streaming, I think it's 5 services, 6 services is where you start to think, I have too many. And I think in subscriptions to news sources, for most people, it might be when you get, maybe it's actually something similar, 4, 5, 6, 7, 8 of these.
Probably.
Professional. Yeah. I'm talking about a professional doing it for business, not like a person buying it for news. So I think that's the big problem but it's smart on them to pull back. I think they probably should have pulled back even more. If they're losing 10 million, 15, if they're losing 10 to 20 million a year, which the math might be suggesting here, 100 people times 15. If they're losing 10 to 20 million, if they're losing 20 million a year and they have raised 83, they have 4 years of runway. They cut 15%, adds a little bit to their runway. Maybe 6 months of their runway or something. I think they might have wanted to cut more. And then I guess the path to profitability is the big question. Somebody, if you have an idea for what the path to profitability on this business is, please tell me. Because I don't understand it. And it just doesn't. Maybe they start an ad network and they just let people put ads across their network. That would work, I think. That would probably work if they started selling ads across and they just said, hey, you can put this ad in your newsletter and we'll take half the money, you take half the money, like a YouTube relationship.
It's going to be real tough to pull that off in this downturn, but maybe eventually it will be. I'm hearing rumors from the media world that it's going to be a bloodbath. The advertising pullback is just so intense.
Is it really?
Yeah.
The ads are getting pulled?
Bloodbath. Not good. All right. Well, I don't want to bum us out. We had so much fun talking about baseball. So maybe that's a nice place to leave it before we go all the way down the bummer hole.
No, I think you'll see the media layoffs will be, are going to be, they'll be deep. And I think that's the place, actually, I'll say you'll see remember I've been talking about like the rescinding of offers is like, the one right before pay cuts and what I'll call austerity measures, which could be, we're getting rid of this travel. We're getting rid of travel. We're getting rid of, whatever spends people had or, conferences, conference budget, whatever. All that's going to start to get cut.
Yeah. Whole divisions are going to go.
Yes. And whatever divisions are making money will be the ones that stay. So that 100%. Is actually another way to do it. Tune in tomorrow. We're going to have more news. If you want to suggest news stories or have Ask Jason, Ask Molly questions, We Live in the Future. If you give us a great We Live in the Future, I will send you an Ember mug or, something fun. Okay. Or I'll send you something for free. Maybe I'll send you some Liquid IV or an Ember mug. We're always looking for a startup of the day. Really interesting, novel concepts. Send it to producers at thisweekinstartups.com. We're always looking for We Live in the Future. Producers at thisweekinstartups.com. If you send those, we're going to send you $100 gift card or a prize. Okay, that's simple. If we use it, you don't send 100 and I'm going to send you 10 grand. It's not being ridiculous. But if you have those topics, at Molly Wood, at Jason, and we have this community going, thisweekinstartups.com/TC. That is our Twitter community.
And we have thisweekinstartups.com/Discord. We do not have this group on Facebook, but please feel free to enjoy our groups on Twitter and Discord and subscribe to watch our live show on YouTube at thisweekinstartups.com/YouTube. Yes. And then, of course, if you're a founder,
yes,
Jason's got an idea for you.
Yes. If you're a founder, go to usebubbles.com/twist and make me your pitch. And if you make a great pitch, I might use it on the air and I'll watch it and I might retweet it. So go ahead and make your pitch using usebubbles.com/twist. That's one of our partners. They make a really cool product and I will watch those. And we might use it we might use your pitch in our ad. So you get a little extra promo here.
And it's free.